KLIP ETF, a covered call strategy for China's internet giants. Should you dip your toes? The Chinese internet sector has long captivated investors, offering exposure to a dynamic landscape with familiar giants like Alibaba and Tencent alongside rising stars like Baidu and JD.com. However, navigating this space can be complex, with uncertainties surrounding regulations and economic factors. Enter the CraneShares China Internet Covered Call Strategy ETF, KLIP, a unique offering that attempts to mitigate risk and generate income through a covered call strategy. But is KLIP the right fit for your portfolio? Let's delve into its intricacies through a Q&A format to see if it deserves a spot in your China investment strategy. What exactly is KLIP? KLIP tracks the CSI China Internet Index, which includes leading Chinese internet companies like Baidu, Tencent, Alibaba, JD.com, Meituan, and Pinduoduo. However, unlike a traditional ETF that simply buys and holds these stocks, KLIP employs a covered call strategy. This means the fund not only buys the underlying stocks, but also writes, sells, call options on them. How does the covered call strategy work? A call option grants the buyer the right, but not the obligation, to purchase a specific stock at a predetermined price, strike price, by a certain date, expiration date. When KLIP writes call options, it receives a premium upfront. This premium contributes to the fund's overall returns, generating income regardless of whether the underlying stock price goes up or down. What are the potential benefits of using a covered call strategy? 1. Income generation. The received call option premiums provide a steady income stream, potentially making KLIP a good choice for income-seeking investors. 2. Downside protection. By selling call options, KLIP limits potential upside if the underlying stocks soar, but it also caps potential losses if the stock prices decline. This creates a more balanced risk-reward profile compared to a traditional long-only China Internet ETF. 3. Volatility reduction. The covered call strategy can help reduce the overall volatility of the fund compared to the underlying index, potentially making it a smoother ride for investors. Are there any downsides to the covered call strategy? 1. Capped upside. If the underlying stocks experience significant gains, the call options will likely be exercised, limiting KLIP's potential returns compared to a long-only ETF that fully benefits from the stock price increase. 2. Time decay. The value of call options naturally decays over time, regardless of the underlying stock price. This can drag down KLIP's performance if the market remains stagnant or declines slightly. 3. Cost of options. The fees associated with writing call options can slightly eat into KLIP's returns compared to a traditional ETF. How has KLIP performed historically? Since its inception in 2017, KLIP has generally delivered lower volatility than the CSI China Internet Index, highlighting the risk-mitigating effect of the covered call strategy. However, its returns have also lagged the index, particularly during periods of strong market rallies. For example, in 2021, the index surged over 50%, while KLIP returned around 25%. Is KLIP right for you? The decision to invest in KLIP depends on your individual investment goals and risk tolerance. If you prioritize income generation and risk mitigation over maximizing potential returns, KLIP could be a valuable addition to your portfolio. However, if you are primarily focused on capital appreciation and have a high-risk appetite, a traditional long-only China Internet ETF might be a better fit. Are there any alternative covered call ETFs for Chinese Internet exposure? Currently, KLIP is the only covered call ETF specifically focusing on the Chinese Internet sector. However, you can explore covered call ETFs that track broader Chinese indices or even global technology indices, depending on your desired level of diversification and risk profile. What are some key considerations before investing in KLIP? 1. Understand the covered call strategy. Thoroughly grasp how the strategy works and its potential benefits and drawbacks before investing in KLIP. 2. Set realistic expectations. Don't expect KLIP to outperform the market during strong rallies. Its primary focus is income generation and downside protection. 3. Evaluate your risk tolerance. Only invest in KLIP if you are comfortable with the potential for capped upside compared to a traditional ETF. 4. Monitor market conditions. Be mindful of the overall market sentiment and adjust your exposure to KLIP accordingly. In conclusion, KLIP offers a unique approach to investing in China's internet giants, combining potential income generation with downside protection through the covered call strategy. However, it is crucial to understand the strategy's limitations and ensure it aligns with your investment goals and risk tolerance before making a decision. Carefully weigh the trade-off between income and potential upside, and consider diversifying your holdings with other China or technology ETFs for a more balanced exposure. Ultimately, KLIP presents an intriguing option for risk-averse investors seeking a steady income stream from the dynamic Chinese internet sector, but its suitability hinges on your individual investment objectives and risk profile. Research diligently, consult a financial advisor if needed, and make informed decisions to navigate the ever-evolving landscape of China's digital giants. Additional considerations. 1. Tax implications. The income generated from call option premiums in KLIP may be subject to different tax treatments compared to traditional dividends. Consult a tax advisor for specifics. 2. Liquidity. KLIP is a relatively smaller ETF compared to some broad China Internet ETFs. This could lead to wider bid-ask spreads and potential challenges in entering or exiting positions quickly. 3. Alternative income strategies. Explore other income-generating strategies within your portfolio, such as dividend-paying stocks or fixed-income investments, to diversify your income sources and potentially achieve a more optimal risk-reward balance. Remember, investing in any ETF, including KLIP, carries inherent risks. Conduct thorough due diligence, understand the underlying investment strategy, and align your investment decisions with your financial goals and risk tolerance. By approaching KLIP with informed awareness and a comprehensive investment strategy, you can potentially leverage its unique features to navigate the exciting yet complex world of China's internet giants.